Hi, and welcome back to the Food Fund, where we analyze investing in food stocks, beverage stocks, and restaurant stocks. If you are new here, our goal is to help you put your money where your mouth is and invest in the best food companies. Is this new breakfast restaurant a good investment? In this video we will be analyzing if First Watch stock is a buy. Could First Watch, stock ticker symbol FWRG, be ready to rebound higher? Let's find out. We have a lot to cover, so let's go ahead and jump right in. Cue the logo. Let's start with some background info on First Watch Restaurant. First Watch was founded in 1988 when founders Chris and Lori Culver opened the first location in Coral Gables, Florida. The concept centered around serving fresh, made-to-order breakfast, brunch, and lunch options. First Watch quickly gained popularity for its unique menu items and commitments to high-quality ingredients. Today, First Watch operates over 500 restaurants across the United States, serving a diverse menu featuring omelets, salads, sandwiches, and other fresh fare. Their headquarters is located in Sarasota, Florida. Now let's look at the price action. Starting with the 1-year chart, we see that First Watch had a CAGR of about -19%. Zooming out to the 5-year chart, we see that First Watch had a CAGR of -12% over almost 3 years. First Watch's share price has struggled a lot since going public in 2021. A comparison of investing $10,000 in First Watch versus the S&P 500 reveals a stark difference in performance. First Watch ended with a balance of $10,477, yielding an annualized return of 1.88%, while the S&P 500 grew to $11,898 with an annualized return of 7.20%. Volatility was significantly higher for First Watch, with a standard deviation of 39.25% compared to the S&P 500's 18.66%. First Watch experienced a best year of 48.56% and a worst year of -19.27%, contrasting with the S&P 500's best year of 26.19% and worst year of -18.17%. Maximum drawdown was more pronounced for First Watch at -31.19% versus the S&P 500's -23.93%. Both Sharpe and Sortino ratios favored the S&P 500, with values of 0.27 and 0.39, respectively, compared to First Watch's 0.14 and 0.22. These metrics consistently demonstrate the underperformance of First Watch relative to the S&P 500. Now let's hop over to market share and take a look at First Watch's market share. Here we have the dashboard, where we can quickly gather a lot of information at a glance. Expanding the dashboard, we can look under restaurants and see that First Watch is categorized as a casual restaurant company. Expanding the casual restaurant tab, we can see that First Watch has the third smallest market share of the companies listed, but it does appear to be gaining market share. Let's look closer at the year-by-year changes in market share. So we come down here and type in the ticker symbol for First Watch, FWRG, and see that the market share is just 0.11% out of the publicly traded food, beverage, and restaurant stocks currently in the market. First Watch attracts very little food spend but has been growing market share pretty quickly. The 5-year market share CAGR for First Watch is 24.57%. This means that First Watch's market share is outpacing growth in the wider industry. If we start in 2020, we see that the market share was 0.053%, 0.08% in 2021, 0.088% in 2022, 0.1% in 2023, and 0.11% over the trailing 12 months. This company is quickly eating the competition's breakfast, pun intended. Let's take a look at the fundamentals to learn more. Gross margin is 22%. This is on par with other casual restaurant companies. Revenue has compounded at around 36% over the past 5 years and has reached over $923 million most recently. First Watch's revenue had been growing very nicely over time. Love this. When we look at cash flow, we see operating cash flow flipped from negative to positive in 2021 and has continued to climb since then. while capex has worsened at a 49% CAGR. As a result, free cash flow flipped positive in 2021 as well and has managed to just barely stay positive. Kudos to the management team for achieving operating cash flow positivity. However, since going public, the company has been spending aggressively to expand as noted by the rapidly rising capex. If First Watch can continue to have positive free cash flow while in expansion mode, no matter how small, I think the company can do really well. Weighted average shares outstanding have risen over the last 5 years, going from 45 million shares in 2020 to 61.7 million shares most recently. First Watch has been diluting shareholders. It is important to note that the largest dilution event was the initial public offering in 2021. Since then, dilution has occurred at a reasonable 2% per year. Now let's view return on invested capital. Return on invested capital has grown from -15.2% in 2020 to 2.6% most recently. The flip from negative to positive is the most noteworthy in the history of this metric for the company. I think First Watch can continue to improve investment efficiency and look forward to the company doing so in the future. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage as well as inventory control. Going from 3 days in 2020 to 1 day most recently, First Watch has gotten more efficient over time. This is what we want to see. Hopefully this metric can return to negative values soon. Last, let's look at First Watch's debt. The net debt to EBITDA has actually increased over time, going from -37 in 2020 to 6.5 most recently. First Watch has a fair amount of debt on the books, but I think as earnings begin to pick up that this value will fall, especially if the company can remain free cash flow positive. First Watch looks kind of scrumptious. In any event, should it be added to the watch list? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the food fund. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for First Watch. It is a restaurant company with a gross margin of 22%. The 5-year revenue per share CAGR is 24% and the 5-year free cash flow per share CAGR is around -84%. The negative free cash flow per share CAGR is due to the increase of shares from the IPO coupled with a drop in free cash flow with the recent increase in capex spending. The gross margin and revenue growth look good in my opinion. A return on invested capital of 3% is low but seems to be improving. Next, the cash conversion cycle of 1 day is good. Ideally this value would be below 0, but I expect that there are many years ahead for the company to further optimize this metric. Concerning debt, a net debt to EBITDA of 6.5 means that it will take First Watch about 6.5 years of earnings to pay off their debt. So from a fundamental standpoint, First Watch looks promising but definitely has more work to do. Now let's switch our attention over to valuation. First Watch is overvalued relative to the S&P 500 with a ratio of 1.4. The price to earnings growth, or PEG ratio, is 1.1, indicating that First Watch is just a little overvalued relative to their projected earnings growth. To start, I really want to mention that the PEG ratio of 1.1 is very good, especially for a rapidly growing restaurant company. Other newly public restaurant companies often have much higher PEG ratios. For example, Dutch Bros has a PEG ratio of 7.3 and Cava has a PEG ratio of 8.2. By comparison, First Watch looks like a bargain. First Watch Restaurant has carved a unique niche in the restaurant industry by focusing exclusively on the daytime dining segment, serving breakfast, brunch, and lunch. The company's strong brand identity, coupled with a menu emphasizing fresh, made-to-order food, has resonated well with consumers. This has translated into consistent growth and profitability, making it an attractive investment proposition. However, like many other restaurant companies, First Watch has faced challenges related to expansion pressures, supply chain disruptions, and inflationary burdens. The company's ability to navigate these headwinds and maintain its growth trajectory will be crucial for long-term investor returns. One area of potential concern is the involvement of private equity funds in the restaurant days before going public. The involvement of private equity funds typically leads to multiple secondary offerings as private equity dumps shares in order to provide returns for their LPs. First Watch is no different. Since their IPO in 2021, the company has executed several secondary offerings. In September 2022, unidentified shareholders, which are assumed to be founders and early investors including private equity, sold 4,500,000 shares at $15.50 per share, netting the insiders just under $70 million. Following this, in March 2024, certain funds managed by Advent International, a significant shareholder, sold 6 million shares of First Watch common stock near all-time highs. It's important to note that these secondary offerings did not dilute shareholders but resulted in massive share price declines. My takeaway from this is that private equity ownership will take any share price rise as an opportunity to sell, adding volatility for other shareholders. So, investors beware. Beyond the secondary offerings, First Watch has made steady progress as a public company. The company has consistently reported positive comparable restaurant sales growth, driven by menu innovation, marketing initiatives, and new restaurant openings. Expansion plans, both in terms of company-owned and franchised units, remain a key growth driver for First Watch. Overall, First Watch presents an interesting investment opportunity in a niche restaurant concept. I like the focus and profitable growth strategy. For me, First Watch is going on the watch list. Many thanks for watching. What do you think about First Watch and its attractive valuation? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now and don't forget to put your money where your mouth is.